Hey there, Investorholics and friends. Welcome to another episode of the ETF Spotlight Review. Today we will be taking a look at EMKT, which is the VanEck Vectors Msci Multifactor Emerging Markets Equity ETF. That's a bloody mouthful. This ETF might be of interest to you if you have a positive view on emerging markets over the medium term, as it allows you to own companies listed in all of these emerging countries in a single trade. You'll get exposures to countries like China, India, South Korea, Taiwan, South Africa, Saudi Arabia, and Brazil, just to name a few. There, so stick around if emerging markets are of interest to you. Hey there, Investorholics. This is Scott. Crack the Sky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. Okay, let's jump on in head first here. EMKT invests in a diversified portfolio of emerging markets listed securities with the aim of providing investment returns before fees and other costs which track the performance of the index. Now, what is this MSCI Multi-Factor Emerging Markets Equity Index, you might say to yourself? Well, the index is based on the MSCI Emerging Markets Index as its parent, obviously, which includes large and mid-cap stocks across emerging market countries. The index aims to maximize exposure to 4 factors. So they're looking for value, momentum, low size, and quality. We all like a good old quality stock here, while maintaining a risk profile similar to that of the parent index. As always, we like to have a bit of a look about why on earth we would want to own this. So gives you exposure to the world's fastest developing markets. Emerging markets offer investors access to developing nations including China, Taiwan, South Korea, India, etc., etc., etc. An optimal approach to emerging markets. What the hell does that mean? A portfolio that provides access to economies experiencing rapid change by investing in companies included on their value, size, momentum, and quality factors, as we've touched on before. Outperformance potential. Well, we've got a lot of potential to outperform. Some of us do, some of us don't. So taking a diversified approach across factors has been proven to produce outperformance over the long term compared to the benchmark market capitalization approach. So yeah, anyway, that's in a nutshell what we're doing and why we're looking at this one. Let's jump on through to the next slide. Okay, we're looking at a net asset value here of $21.90, trading just below that at $21.86. Very small market cap for this one, $48,200,000. Reasonably high management cost, but you expect that when you look at the stocks included in this ETF. Definitely makes it difficult to trade across these emerging markets. So you've got a management cost here per annum of 0.69%. Distribution frequency is annually, so you'll get a dividend payment in July. Dividend yield is 2.25%. Which isn't great, but it isn't the worst. So EMKT currently holds 442 securities in the ETF portfolio, dominated by information technology, consumer discretionary, financials, And that all totals up to 71.8% of the total sector coverage of the ETF. Obviously, China is probably the biggest, well, is the biggest emerging market economy in the world, so that obviously is going to take up about 40% here. Taiwan, well, is Taiwan China? You could probably say Taiwan is China, but anyway, it's been broken out here at 16.3%. India comes in there at 12.1%, and South Korea comes in at just over 10%. And those so 5 countries make up 78.9% of the countries covered in the ETF. So looking at the percentage assets of the top 10 holdings, and that totals 27.8%. We've got a PE for this one, 14.1, which isn't too bad. Anything that hovers around 10 is probably not too bad value. Book value is reasonable at 1.84%. So this ETF could be appropriate for investors seeking exposure to a diversified portfolio of companies from emerging markets without having to take the time to research individual countries and companies. As always, when we're looking for ETFs or any other investments, we want to do some research to get a broad understanding of the market. So there's a few more alternatives down below: IEM, VGE, or WEMG, or worthy contenders to help you on your journey doing some more research anyway. So yeah, number one here, looking at Taiwan Semiconductors. Then we've got Tencent, Alibaba, United Microelectronics, Infoisi, whoever that is, Kia, Lining Co, Samsung, U.S China, and Impala Platinum. And that, by the look of it, is a mining company listed in South Africa. This hasn't really shot the lights out since inception. What's that? Early April 2018. Performance since inception has been a dismal looking 3.53%, but if you had bought it 12 months ago, you would have got a current return of 23.73%. Return, obviously that would be to do with the COVID crash. You can see the graph there. So yeah, if you'd invested $10,000 when this one listed, your investment would be worth about $11,000. So not a great return for 3 years worth of patience and waiting. So as always, investments carry risks. Those risks are associated with the financial markets generally, individual company management, industry sectors, stock and sector concentrations, fund operations, and index tracking. We should always check out the PDS before we contemplate buying anything. Would I buy this one now? Probably leaning towards no. I'd rather go and actually look at the countries and buy an ETF for my favorite countries, but that's another story. So I'd probably say be a no on this one, just for the sheer fact that it hasn't really performed too well over the last 3 years. I suppose the big unknown for future performance for these emerging markets is they're always kind of counter-cyclical, hard to pick. But also with COVID-19, what's really going to happen in the next 2 to 4 years, 5 years with some of these countries, it's a massive unknown in my mind anyway. Other people might have a bit better handle on things than I do, but I'd be very cautious about going into something like this anyway, unless it's only a small, obviously it's a small portion of your portfolio, then it might not be a bad option, but I just don't see the performance. And you've got to go into these things counter-cyclical, so you're going to need to do some broader research on where and how the emerging markets are really performing and where they are in their cycle, because they always run counter to developed markets. So that'd be where I would start first if I was going to research something like this. You know, if I was going to invest a few bucks in this one. Anyway, hopefully that was interesting and added value, guys. As always, have fun, happy investing. Ciao. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are, expand your investment horizon and crack your financial sky. Thanks guys, see you later.